Hello and welcome to another update video about Polkadot. On the dot chart, we are still most likely here in this fifth wave in a potential ending diagonal. I'm watching this area that we determined in the previous videos as a potential target. Here between $3.46 and $4 basically as a potential target. It still doesn't mean it would be let's say a great trade setup or anything. I can only say this is where the price will likely get into, and then if we get a little bit more clarity from the subwave structures, we're going to zoom in a minute, then we can define the target a little bit more precisely. Nevertheless, due to the current uncertainty in the market and the general situation, I would just be cautious and careful, because this could get much more ugly if the price just breaks below $3.47. But ideally, we start to see a first smaller impulse to the upside within this region, and then when we get a first 5-wave move up and a 3-wave move down, it's possible to set a tight stop loss, and also there is a greater chance of success on the long side if we have a first 5-wave move up, right? Anyway, we're moving down here in potentially this ending diagonal, which can be the last wave of a cycle. Here in this move down, it would be the last wave down, this fifth wave ideally. And then in the fifth wave, we are in the fifth wave. Okay, so that's pretty good. But within this fifth wave of the fifth, we are probably dealing with this WXY correction. So it's quite a complex corrective pattern. This can happen. And if you think, why is a fifth wave corrective? It just has to do with the situation, with the fact that it's likely in a ending diagonal structure in which all of the subwaves are corrective within the 5 waves. Now, looking at this, we talked about that in the previous videos. We came down most likely off the 14th of July high. Here to this swing low, I consider that a wave W. And we topped here in this resistance area, which was a short trade area, in an X wave, and came down. Nice reaction to resistance, coming down in the Y wave. And the Y wave again is an ABC structure. We are likely in the wave B. It is a very weak B wave as it seems, but a little bit like a bear flag it looks, with a very well-defined trend line. And surely, I mean, this could still move higher in the B wave, but resistance is $4.65. And against that level, it is possible to focus on the downside. Only a break above $4.65 would make me think that something different is going on here. But this is a bear flag, consolidation below resistance. Because it is so weak, I'm going to add the 38.2 FIB level as well. I mean, it's going down from here more directly would be very weak, to be honest. I would prefer to see either a more extended B wave, like time-wise or price-wise. It would be nice to get at least to 438 or $4.46. But anyway, against this level, I would focus on lower. And as soon as we see the C wave, I mean, what we need to see in the C wave is, again, 5-wave move. Once we see a break below the trend line and the first 1-2 setup, we can probably say, okay, this is subdividing now as a 5-wave move to the downside. And as soon as we can see that 5-wave move down, then we can also start to develop and define a key target for the C wave down, because only if I have the first tiny 5-wave move down and 3-wave move up, then I have a good confirmation that this B wave has topped in resistance, and then we can define the target for the C wave more precisely. At the moment, it's between $3.46 and $4, but it's quite a large area. There are different layers of levels in between, right? And depending on where we top, we can give a more precise target. So focus remains on the downside. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.